Morning, everyone. This is Travis Witherspoon from Carter Capital. Hope everybody's doing very well on this uh, Wednesday morning. Getting everything situated real quick so I can make sure that everybody's seeing it live. You can hear the echo from Facebook. We will not do it on Instagram today. My son has my phone, and obviously, I want him to kind of stay a little bit quiet. So we'll do everything on YouTube and we'll do everything on Facebook today. So we're getting ready to switch over, getting ready to go ahead and get started. So here we go. And we are live. This is Travis Witherspoon from Carter Trading and Carter Trading on YouTube and on Instagram. Trade with Travis on YouTube. Hopefully everybody's doing very well. Hope everybody's done had a very good day, and hopefully your trading has been well. It's been a mixed bag for me. It's kind of funny. I'm kind of struggling on the indexes like the Nas 100 and the US 30. I'm going against the direction for some reason. And we got to do a little bit better on that. But overall, let's look at some overall trading opportunities, and then after that, we can see. Hopefully, we can be able to turn this into a better day. So I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results. It means that if you end up making money yesterday, it's not promised that you end up making money today. So show myself onto the screen right now. I hope everybody's doing very well. Cleaning up my son real quick. He woke up early, and obviously, anytime he wakes up, he's hungry. So, trying to get him breakfast and everything else like that. Hopefully, everybody's doing very well. Let's go ahead and take a look at the charts. We have a lot of opportunity. We have interest. Leave that alone, baby. Leave that alone. We have interest rate decisions that are coming on a little bit later on today that we have to be able to pay attention to from the Japanese yen. And we have one that's going to end up happening from the Bank of Canada. So we have to be able to pay attention to that as well. But other than that, what I see is the Japanese yen kind of ripping. I actually ended up taking early profit on this one a little bit earlier today. Well, actually a little bit earlier yesterday. So we're looking at being able to get in a little bit later on. Everyone, just give me 1 quick second so I can be able to get my son situated, and then after that, we'll go ahead and move forward. Here we go, big dog. You're making a mess. Come on. Okay, here we go. Sorry about that. All right, so Bank of Canada is going to end up having an interest rate decision at 10 o'clock a.m. So we need to keep that in mind and see what's happening with that pair. We need to pay attention to what's happening with oil. Maybe that might be a determining factor on how the market's going to end up moving. But we have to be able to keep our eyes on that. A little bit later on today, we're going to end up seeing that the Japanese yen is going to end up having a retail trade information. We have to be able to pay attention to that. And obviously, we have the interest rate decision that's going to happen right around 12 o'clock. Right around 11 o'clock tonight when it comes down to, right around 11 o'clock tonight when it comes down to the interest rate decision from the Bank of Japan. Now, I do not expect anything to change from the Bank of Canada. I do not expect anything to change from the interest rate decision from Japan, which means that it should be a boost when it comes down to the push of the overall move. And what do I mean by that? Well, so we're going to start taking a look at this. The first pair that we'll look at is the US yen. I actually ended up closing out on the pound US with a I actually closed out on that one. I took a small little loss on that one. It broke a fractal high. We'll go over that in a second as well. But taking a look at the big three, what we see is the market very close to the sell zone. Market hasn't moved. The market hasn't moved because, once again, it's an election period. We're seeing a lot of consolidation between all of the markets. There are a lot of indecision that's happening right now. We should see that there will be some decision that will happen in the near future. The market is retesting this overall trend line again within this consolidation. Even though it's in the sell zone, there's no clear decision that the market is going to move to the downside, but I do consider the market to be bearish. If we take a look at it from the daily, we see the breakout of the overall position, but right now we're retesting off the backside of this trend line again. So based off of this movement, we're going to see how the market reacts based off of the upside move of this reject. If it rejects off of this, you can go ahead and take the sale. Your second entry would end up being a counter trend line break if that happens again. And then after that, you can go from there. But the market is getting closer to the buy zone, so we have to be a little bit careful when it comes down to that. We take a look at what happened with oil. Oil ended up having a huge move to the downside again. The market is about 70 points away from being at support at $37 a barrel. Do I expect that the market is going to end up falling all the way there before the interest rate decision? No, I do not. I think oil is going to end up moving independently on this overall move. If you're not in this overall pair, there's no reason for you to be able to look at being able to get in, but I would pay attention to if the market does fall down to support and holds that support, because now that's where you have an area to be able to buy at. So that would be the thing that I'm looking at for its overall trade in this one as well. Market's in consolidation. We're going to stay paying attention to that consolidation, and then after that, go from there. We take a look at what's happening with gold. Gold has fell down back to that 1894 area. So we are interested in being able to sell this. We've seen that we've had support in this overall area before. Now we need to take a look at this on the 2 hour and see what has happened with the market. Literally, the market just bounced off for 1894 for this overall move. We've seen that that's happened a few times. And then after that, the market has popped back to the upside. I am interested in being able to buy on this overall pair. Matter of fact, let me open up my chart. I want to go ahead and see if we have an opportunity. Currently, right now, if you want to confirm this overall move, I'll wait for the counter trend line break to the upside. Currently, right now, we don't have that counter trend line break as of yet. If you're trading this based off of support, I would just look at trading it based off of support and putting your stop below this, understanding that you're buying this off of consolidation. That means that you have to lower your risk as well. Now, if you're lowering your risk, that just means that you're trying to make sure that you give yourself a chance to be able to sustain what's going to happen with this overall move. The market is not in the buy zone, but the market is at a primary support level. We've seen that it's fell below 1892 before, so you want to keep your eyes out on it and then wait for the market to be able to hit 1892. Then you could. But 1894 for me is a primary support area. Once again, I will wait for the market to be able to break a counter trend line break and then be able to give you a chance to be able to go from there. But I am very much interested in being able to trade this to the upside. What I'm going to end up doing is off the 15-minute. I can see the market is in the buy zone. The first time it gives me a pop up to the upside, I will look at being able to buy it to the upside. So here is our outer trend line. Here goes our inner trend line right here. I don't want to cut the trend that much. We know that we're very close. Anywhere around this area right now, I think is a good place to be able to look at being able to place an entry. The only thing about the entry right now, when you're looking at this from that standpoint of being able to buy it, like literally right now, the only thing that I would kind of caution myself is that we don't have a counter trend line break yet. We don't have a counter trend line break, then that means that the market could easily look to fall again. But 1895 to 1894 area is a pretty good solid area to be able to trade. Let's set up the stop loss and everything else on where we would place our stop at. What I would do is I'll go to the previous lows and I'll say, okay, well, the low of this one was right around 1893. So previously, when we end up placing in our fibs on this one before, based off of this upward channel, we place our stop at 1870 for this overall move. Because we don't have confirmation, I'm going to be a little bit more tighter on this move when it comes down to this. I'm going to look at this low right here, and I'm going to project, and I'm going to place my stop below that low right there, which was 1889. I'm going to say 1880. I'm going to give it 1885 as a projected stop. Now, if the market ends up breaking below this and it retests and it gives us an actual low from there, then quite frankly, there's really nothing for us to be able to do. We need to go ahead and get out of it. But I'm going to try to see if I can get, I'm going to say 1888 as the actual stop. We project that from here to here. That's about 66. Okay. That'll be about 69 points. So that'll be about 6.9 points on that one. Let's go to the FMA. Let's see what we have for what's this. Now, once again, gold, the US dollar has been ripping this morning, and it's been ripping because of coronavirus scares, right? Now, initially, when you look at that, you always go back and you say, okay, well, what is the reason for that fall? The reason for it falling is that going to end up being, is this just another primary way of being able to look at and say, should we look at being able to get in? Or are we looking at a position to where it's just not the best position to ultimately get in right now? Stochastic is definitely overbought. Right now, I'm going to say that the daily move has been up, but we have seen pressure of this market moving down. Let's see, let's go to the 2 hour. 1894, that's been a support. If this market breaks below this level, where would the market actually fall down to if that happens? My heart of hearts is telling me to wait for confirmation. We're very close to 1894, but the problem is we're having strong downside pressure from the US dollar index. And if the US dollar index maintains and holds, and if the US is starting to get stronger, this market can look to be able to fall a little bit more before actually taking a actual position. I can almost argue that this market can fall down to 1859 to almost 1860. If that keeps on happening. The 2 hour is not in the buy zone. Let's go back and take a look at this again. Okay, so what I'm going to do is this. I want to confirm this. I want to confirm this overall break. I'm not going to enter in right now. I need to know if this market is going to break a counter trend line break to the upside. So let's see if we can be a little bit more aggressive on this. I'm looking for the market to be able to maintain this position, break, retest, and then push off. All right, this market has to prove to me that it's ready to push up bullish, or can sustain this quick drop that's happening in the market, and then be able to push up bullish. There's no guarantee that the market is just gonna ultimately end up pushing up to the upside. Right? Because we've seen that it's failed a couple times when we use this as actual support, but we're looking at it right now. It's actually falling through that support right now. So the next area that we have to pay attention to is 1892. If the market goes below 1892 and rips below the downside, then quite frankly, us buying it right now will just turn into a quick loss. So I'm going to wait for a confirmation of this market breaking the uptrend line, wherever that is. If it maintains to be right around that 1890 area and then starts to push up, then I would take the buy. Until then, I'm not interested in being able to trade this one. I will place my stop below 1890, below 1888. Right now, that has been proven to be anything below 1888, anything below 1870 has been an area where that's a solid stop loss, where the market has not failed down to. But we do have to pay attention to what's going on right here and how this market is going to end up moving. I would look very closely at a 15-minute counter trend line break. Allow the market to be able to sustain and see if this market is going to end up holding this level. If it does break to the upside and it gives you a retest, then look to be able to buy it. If it doesn't, then you just stay out of it and then we go from there. But it is at a support level. So gold is one of those ones that are on my radar for being able to look to be able to buy. Currently, the market's in the buy zone. We see a lot of people are looking at being able to buy this. I need them to prove that it's ready to go before I'm going to end up placing my money in on this position. So gold right now is on the short list for being able to do that. We'll take a look at that before we get back. Before we leave here today. Currently, right now, what is happening is that we can see that the U.S. and the Japanese yen have been very strong. We've seen that the Australian yen has been very weak. Australian dollar has been very weak. So the Australian yen will actually be one of those pairs that I'm interested in being able to take a look at. We will take a look at that compared to one of the U.S.-based pairs that we typically look at. So let's start off with the U.S. yen. Because I end up taking profit on this overall pair because of interest rate news. And right now, what we're seeing is this. We go to the weekly first. We can see that the market is still moving kind of steadily toward the downside. It made a new lower low, which is good. And once again, if it breaks past 104, that means that you need to be in this trade, and you just need to hold on, because the market is going to end up rapidly falling down to 101 to the 99 level. I am interested in being able to stay in that. I end up taking profit because of the interest rate decision that's going to end up happening a little bit later on today. I expect going into today that the market will give a 2-hour high price, and then after that we can be able to take profit right now, allow the market to be able to push up, give us a 2-hour high price that we can be able to get into, and then sell it down with better value. That's just my overall opinion. Typically, when I end up looking at interest rate decisions, within that day, the opposite happens. The pair that is weak starts to push up and gives you a little bit of a stronger move, and then after that, you have a chance of being able to get in a little bit lower. Currently, right now, what we're seeing is we do have a strong counter trend line break. We bought it up here when the market broke at 170. Currently, the market is at 104.15. If you're still in this overall price, congratulations, just stay in. Unless the market starts to U-turn on you. Currently, the market is basically in the buy zone or getting close to being in the buy zone at this particular point. So you do have to be cautious about that. As long as the market does not break a counter trend line to the upside, then I would look at being able to stay in. The reason why I got out was because the market ended up doing that. It ended up breaking above. Now, obviously, I fell asleep and the market ended up rejecting it again. So that put me in a position to where I got kicked out off of a false break, but it is what it is. So what I would look at right now is this: if the market doesn't break this trend line to the upside, stay in it, keep your profit, keep on allowing the market to be able to go from there. Remember, 104 is a solid area where the market has been finding some resistance, or anywhere right around that 104 area has been a solid resistance area, support area. So if you're not comfortable with staying in the trade all the way through until later on today, I would say take profit. What I do expect to happen is this: I expect that the market is going to end up breaking up. It's going to end up starting to push up, and it will give you an opportunity to probably end up looking to be able to sell right around the same area where we got in at last time, right around that 104.70 area. The reason why I'm saying that is because that we look at the structure of where the market has been moving, and we can see that there is structure right there in that area. So I do expect that the market may push up and give you another chance to be able to sell before before the interest rate decision comes out. And now from there, that give you another chance of being able to go from there. So kind of like double dipping on this one. I'm looking for something like that. We got to keep our eye on it. Obviously, today's going to be a late night because this market is going to end up putting this decision out at 11 o'clock. So we have to pay attention to that. All right, so that's that one. I'm going to move to the Australian yen as my second pair. I know typically we look at US-based pairs, but if there's an opportunity to be able to get into the Australian yen, I want to be able to try it. Yeesh. Okay, Australian yen and Australian dollar have moved down. They moved down because there was consumer price indexes that actually came out, but it was actually positive, but it was negative news for that overall move. It kind of gave that same type of move that happened last week or 2 weeks ago with Australian dollar pushing up strong, and then after that fell down to the bottom side, even with having good news. So we have a counter trend line break. We have a push up on the 2-hour. If you're not in the sale right now, I would not look at chasing the market right now. The daily is close to the sell zone, so this would be basically your counter trend line break, which looking at this market again makes this market bearish again with a counter trend line break. What I would look at on the 2-hour is that we found that 71, basically the 71 area has been a past support. We've broken out of it. Now I want to see if this market is going to push up and turn it into a new resistance. So we want to see if we can be able to get it up right around this area, which would be about a 40 pip move to the upside. We might end up once again, I think we might get that a little bit later on today, with the market moving against the Japanese yen for the interest rate decision. And then after that, looking to be able to sell down to the downside. So that'll be something that we have to pay attention to. That is a area that I'm interested in being able to sell at. If you're in right now, stay in the trade. Make sure that you manage your equity management and be able to go from there. If you're not in the trade, I will look at something like that. I want the market to be able to turn this structure past support into a new resistance, and then after that, look to be able to sell down from there. So Australian yen, Australian United States dollar are going to be pairs that I'm really going to pay attention to for its overall movements. Right, this one gave that same type of move. We was interested in being able to sell this one one time before. We found out that this market had consolidation. You look at it, this is a strong consolidation area that has happened. This market has broken out of this consolidation area. Now we're looking for the retest to the backside. So the retest to the backside on this one will be at 74.20, right? Same deal, same type of play. Looking for the market to be able to retest the backside of this trend line, and then after that, or retest the backside of that support, turn the past support into future resistance, and then look to sell it from there. We will probably get that information right around 11 o'clock today. So I expect that going into this session that the Australian dollar will be bullish a little bit later on today, and then after that we'll give an opportunity to be able to sell. So that's the look that I'm looking at right now. Now this is getting close to our R3 zone on the 2 hour, so that means that the bears have controlled the market. So you're not going to get that much. You're probably going to get one opportunity to be able to sell this, and to be able to sell it very strong. So you have to be aware of that overall situation, and then after that be able to sell it down to the 71 area. So you're probably going to get one opportunity once this market pushes back up. Once it pushes back up, that'll probably be it. So you just have to be aware of that and take advantage of that opportunity when it presents itself. So Australian yen, I like Australian yen, I like the US yen, I like the Australian United States dollar as pairs to be able to pay attention to going into later on tonight. Okay, I'm writing that down for myself. USD and US yen. Okay, now take a look at the Euro United States dollar. There's been a lot of spiking cases when it comes down to the euro, so I'm expecting that that market has fell down again, and that's exactly what has happened. Remember, we were looking to be able to buy this and try to find some overall buying opportunity, but we did also know that this market was going through consolidation. Now, the consolidation, that area that we were looking at being able to get into, was right around the 1.1732 area. Now, this market is getting very close to that overall area for support. Now, what we're looking for is to see if this market is going to end up holding right here. And if it does hold right there with a counter trend line break, then we'll look to be able to buy. The only thing that I do not like is the stochastic is not close to the buy zone. So that means that we're basically in a no trade area. So this is, out of all of the other pairs, this is probably one of the ones that I'm not interested in the most when it comes down to getting into it, just because of where it actually is. So that's a very quick and detailed idea on what I want to do. I just want to see the market fall a little bit more, and then after that, once it gives me confirmation, that we can look at being able to trade it. Let's go back to gold real quick. Let's see what's happening with gold. Let's see, has the market found any type of support? Remember, this market actually broke out of this channel to the upside. We were looking at basically buying it from the channel to the upside, and it's broken down. So there's more of a emphasis of this market breaking more to the downside than it is the upside. So I need you to understand that. I think the risk now is more on gold basically falling than it is basically going up and buying bullish. So this small little area where we have that consolidation, I would not look at trying to buy it all the way up to the past future levels that we were talking about before, which was right around that 1947 area. I don't think that that's going to happen right now. I do think that we can buy this back up to 1902 and do it very safely if the market maintains and holds this position. This is what I'm looking at right here. I'm not looking at buying it back up to 1909. I don't think that'll be a smart decision. I think the smarter decision will be buying it back up to 1903, which is the point of control. If we can be able to buy it back up to the point of control, that would be basically past performance is, past support turning into future resistance. for this overall area. And I think that'll be a solid price for it being able to get in. Let's see what's happening out to 15-minute. Maybe we might get a little bit more of an answer. All right, we do not have that counter trend line break as of yet. But we are in the buy zone. We get that counter trend line break bullish, I will look at being able to buy up. I'll definitely look at being able to buy up. I'm going to be a little bit tighter on this play right here. Any break bullish from this overall move, then I'm interested in being able to buy it. If it keeps on ripping below that overall position, then obviously we're out of it and we're not looking at being able to do anything. But I am looking at buying it based off of this move. If we can get that, then obviously that's a play to be able to take. We want to buy it up to 19. I got 1907 now. I'm going to say the 1903 to 1905 area. Better yet, I'll put it to you like this. I will look at being able to buy. I will look at being able to buy right where this death cross is about to happen. I want to buy up to where that death cross is going to be. So the 1903 to 1904 area will be the position where I want to get in. Stop loss from this overall spot right now will be just below it. We're going to go 1888 for the stop loss. If the market breaks below this overall position and hits 1888 before going back up, then we're out of this trade. We're not even thinking about it. See. So 1888 will be the stop loss. Okay, so risk on this overall trade currently right now, we end up being anywhere from this counter trend line break up to right here. Stop will end up being right there. We have a risk reward of we have a risk reward of 1 to 3. So we have, risk reward of 1 to 3 if that does happen. I do like that. I do like that reward if it does happen. Currently right now, we're looking at 45 on this one. We got 45. We can raise our entry lot size, but this is a R4. So we're going with, I'm going to go with 3% on this overall trade. So we can risk $198 going after. That's our reward on this one. That we can catch it right. Let's say we catch it right here at this spot and it goes up. 124. So 198 to make 545 if that happens. All right, 198 to make 545. I'm all for that. But once again, the market has to break the counter trend line break bullish, and it has to prove itself. If we get that, then I'm good to go. If we don't get that, then obviously I'm not interested in trading it. Stop to be 1888. I have it set up for my alarm and alert. Masterclass students, once we end up getting this alarm, once that happens, then I'll look at being able to send it over to you. Once again, you're lowering your risk. Please do not raise your risk on this one. This is a consolidated trade. Because it is a consolidated trade, that does mean that the market could still ultimately fall. Okay, so keep that in mind. All right, so if you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure you end up subscribing with Trade with Travis and basically watch in and lock in with us when it comes down to these videos and our trading sessions and everything else like that. Please make sure that you like, share, and subscribe, and send this video off to everyone else that you think that might end up being interested in being able to trade with us and being able to go from there. Currently, right now, for this week, we are 1 for 2. We won on the Japanese yen, but I wish we would have stayed in a little bit longer based off of what I'm looking at right now. But if you are in that pair, you did not get that message from me, Masterclass students, stay in it. Just keep on maximizing the overall trade. You should be up about 70 pips right now. So obviously that's a beautiful thing. Pound dollar, we actually ended up taking a quick loss on that one. We're looking at being able to get in at a higher price to be able to sell it down. And right now we're looking at gold for as an overall position. If we can be able to get in, then we'll take that position and then ride it up from there. If not, then we'll just be patient. All right, like always, believe in yourself, change will end up coming, and then always plan your trade and then trade your plan. Everyone, y'all